All right, everyone, and welcome. We are going to be presenting to you today on a topic that I've been asked to present on before. This is Nick Libert with EXIT Realty. You're actually not going to be seeing too much of me or hearing too much from me today. You are really going to be getting the majority of your material, actually all of it, from our wonderful presenter. The Iversen Law Firm has done business with a lot of our agents. They're real estate experts, and their law firm has helped out a lot of our clients in a lot of situations over the years, traditional buys and sells, things like that. But what we know is that right now there are people struggling, and that's why we wanted to make this anonymous. We wanted to record this so that you can get the information you need to make what may be some difficult decisions in the coming days, weeks, and months, because we know here in Illinois, the longer we shelter in place, the longer people are out of work, depleting their savings accounts, and things are getting really serious, and they're going to get worse for a lot of us before they get better. So we want to educate. That's always been our mission at EXIT Strategy Realty. But today and in the coming months, as much as we love to entertain, we've got a magic show coming up on Saturday and some fun stuff, health and fitness, all the usual stuff we've been doing and are going to be doing more of. Today's topic is going to be along the lines of, if you are missing mortgage payments, if you anticipate missing mortgage payments, what to do to avoid foreclosure. What are the different steps? What are the different options for you? So without further ado, I have talked enough. I'm going to pass the presenter role over to my friend Brian Iversen, and he is going to go from there.
All right. Hi, everybody. Hope you all can hear me. Nick, can you hear me?
Yes, I can, sir.
Okay. So let's get the presentation started here. Nick, can you see the screen?
Yes, sir, I can.
Okay. Hi, everyone. My name's Brian Iversen. I'm sitting here with Laura. She can say hi, too.
Hi, everybody.
We are attorneys at Iversen Law, and we're here to give a brief presentation on short sales, forbearance, and forgiveness. We want to kind of inform everybody what their options are, and to note that foreclosure is really kind of a last resort, and there are other things that you can do to make sure that that doesn't happen. So we're going to go ahead and jump right in here, and we're going to talk about that. So without further ado, let's jump in. The first slide here is what is a foreclosure. So I think it helps to define what this is so that you guys can get an idea. A foreclosure is the act of taking possession of a mortgage property when the mortgagor fails to keep up or pay their mortgage payments. So if the owner can't pay off the outstanding debt or sell property via a short sale, the property then goes into foreclosure auction. Okay. If the property doesn't sell at auction, the lending institution takes possession of it, and this could cause even more problems. Foreclosure auction sales are generally much lower than the market value of a property, and in many cases are avoidable. Overall, foreclosures are pretty physically and emotionally draining. Okay, they take a lot out of the family and community, and they also could hurt your credit score. With that being said, it's more advantageous to try the short sale process and or go the forbearance route. We'll be talking a lot more about that later in this presentation and giving you kind of an idea of how to go about doing that. Okay, so let's jump into our next definition here, which is what is a short sale. Okay, so a short sale is selling a property for less money than the total of any remaining balance on the mortgage plus any liens on the property. All right, so selling a property for less money, let's just give an example of this. So you will own a property and you have a mortgage on it for $200,000. You then, maybe it's in an association, right? So you have about $5,000 in back association fees due. Your mortgage lender could approve the sale for, let's say, $180,000. This would then be considered a short sale, as you're selling the property for less than was actually owed. All right, so lenders will generally only approve short sales when foreclosures appear to be inevitable. With a short sale, the lender doesn't have to take the property back and bear the expenses of maintaining it, and it can be sold without having to go through that entire foreclosure process, which we know from the first slide can be lengthy and pretty expensive. They'll also avoid risking the property won't be sold at a high enough price to recoup their profits, and this could happen if they were to foreclose on the property. Okay, so there's two main reasons why homes get approved for a short sale. Okay, so the first one here is financial hardship. Some examples of this are reduced income from unemployment, divorce, a medical emergency, bankruptcy, death of the income provider or spouse. These are just some examples. There's obviously many more, but I just wanted to give you guys an idea of some of the hardships that they're looking for, and then not having enough equity in the home to pay off the mortgage after closing. So the lender's more likely to approve the short sale if they can break even on the home versus going through the foreclosure process, which could be very timely and costly for them. You want to make sure that it's as clear as possible to the lender that in the case that you're in, showing there's enough equity in the property to allow it to sell without the bank actually losing a ton of money on it, because they could lose money on it, or at least less than what they will lose in a foreclosure. So having a comparative market analysis done and ready can actually help determine this factor. We'll get into exactly what that is in the next couple of slides for the documents that you'll actually need to submit to get the short sale approved. Okay, so what I'm going to do is I have two slides of documents that basically will need to be submitted to have the short sale approved. This is not an all-inclusive list. It's just the ones that I've seen the most and that will be helpful in starting the process. Obviously, every lender is going to have their own set of documents that they require, but these are the main documents. I also have a checklist sheet for anybody that wants it. You guys can feel free. We'll give our emails out after and our phone numbers, and you can shoot me an email and I'll actually provide that checklist to you, because it could be very helpful for your clients, or if you're in this situation so you know exactly what documents you need to start gathering. All right, so the first document on here is the comparative market analysis. Okay, so this can be prepared by your awesome EXIT realtors. All right, they know how to do this. They're very good at it. What this is it's basically a document that shows the comparables for the housing in the area where your house is located and similar homes in that area to give a certain price point that the lender is looking for. Okay, so the next document we're going to talk about is the hardship letter. This one we're going to spend a little bit more time on because it's one of the more important documents that you'll need to provide to the short sale lender. The lender must understand the situation is dire, all right? So there's, and that there's no other option for the seller besides doing a short sale or maybe going into foreclosure, which, having a short sale, we're trying to avoid that. So the letter should contain the reason for financial hardship. This could include things like unemployment, divorce, death of a spouse, serious illness, those items that we mentioned earlier. You should also have in the letter a detailed accounting of the seller's finances. And they should include things like their income, assets, debts that are owed, and then give details showing that the seller can't qualify for any other loans to cover their mortgage loan at this point in time. Okay. You'll also want to show things, other assets owned that can't be sold in order to obtain cash, right? So if your seller owns a Ferrari and they have, $100,000 on their mortgage and they're trying to get a forbearance, that's not going to happen, A helpful tip with this letter is to try and make sure that the letter is only one page and to add a little bit of emotion into the letter if you can get it in there. This helps, describe your situation and show the lender you're a real person. You're not just trying to scam the system. You also want to attach as much proof as possible of the statements that you're making, financial statements, letters from employers, doctors, death certificates, etc. A lot of those documents are going to need to be included anyways, and they're in this section, but it can't hurt to back up what you're saying with actual documentation. All right, so that gets us to our third point here, and that's the authorization to release information. I'm just going to kind of quickly go through these ones now because they're more of, ancillary documents that the bank requires. This has to be signed by the seller to allow lien holders to release the necessary information. You'll then need to provide your W-2s for the last 2 years, pay stubs for the last 2 months. And keep in mind that these pay stubs are going to need to be updated every 30 days. So if delays happen in the process, you have to keep submitting these forms and you have to keep doing it in a timely manner. We're going to need most recent quarterly or year-to-date profit and loss statements. And then this is only really required if you're self-employed. A copy of the benefit statement or letter showing the amount, frequency, and duration of any benefits you're receiving. Things like Social Security, pension, unemployment benefits, and things like that of that nature. You'll need bank statements for the last 3 months, retirement accounts, stock market money accounts, things like this, mortgage statements, so your recent loan statement showing the principal and balance. And then if you are trying to claim if you are trying to do the short sale on a rental property, you're going to make sure you need to show any rental income or that you're not receiving any from that property or any properties that you are renting out. All right. So a few more documents here. You'll need a financial income and expense sheet. Okay, so most lenders have their own form for this, so it shouldn't be something that you have to obtain. It's not really that hard to do, and they'll actually give us forms to help you fill out with that. A copy of a divorce decree, if that's something that you're going through. This divorce decree will say, if you're paying any alimony or you have any child support, and show the finances that go along with that. The lender is also looking for proof of any other assets. So any other real estate owned vehicles, boats, that Ferrari we talked about before, motorcycles, investment properties, or anything like that. You will also need to show proof of any liens and judgments or releases of record. What these are is, if you owe association fees, right, or you have code violations on the property, the bank is going to want to see all of these documents and these records that were given to you. They want to make sure that, this stuff could get cleared up with the sale and, they can handle that with the fees that are going to be involved. A couple more documents here, a judgment affidavit, an arm's length affidavit, an executed listing agreement, and then detailed listing history. And you can actually pull these off the MLS. And then you're going to want an executed contract. And we want to make sure that our executed contracts have a closing date of at least 120 days out. The short sale process is a little bit longer than your normal purchase and sale. And you want to give yourself enough time to get all these documents in, get them approved. It's just a bit of a longer process. But, it's much more worth doing it this way than having to go through a foreclosure. And then the final document here is you will need to provide the buyer's pre-approval letter. If you have an interested buyer and they're trying to go under contract with you, you're going to want that anyways. That's something that can easily be provided. So now with these documents, compiling them and getting this information ahead of time is going to be crucial in ensuring the deadlines are timely met. You'll also need to make sure that all the information is current. So if you provide non-current information, you're just going to need to resubmit the docs, and this is going to cause delays in the process, all right? So you guys want to make sure you get everything in on time and it's all current. So let's talk about the process of the short sale. So now you've collected all your documents, you got them all together. What you're going to want to do is submit them to the short sale lender, okay? So you're going to submit this, and then they're going to acknowledge receipt of this file. It could take anywhere from 10 to 30 days in some cases, depending on the bank. So again, you'll see where the timeline starts coming in here because it's going to take a little bit for these things to happen. After the bank receives that, they are going to assign a negotiator. This person is going to negotiate the purchase price. This, again, to get this person assigned could take another 30 days. The negotiator's job is pretty much that, right? It's to negotiate the purchase price of the home. They want to look at the comps and they want to make sure that, they are getting the exact value that they need without losing so much money as, going to the foreclosure process. The next part of the process here is going to be the bank ordering a broker price option, okay? This is where the broker generates an educated opinion on the value of the home. As a side note on this one, though, the banks aren't generally going to not share these results with us, no matter how much we ask, unfortunately. The next step, a second negotiator could be assigned, depending on, what bank it is that we're going through for the short sale. This, again, could take another 30 days. And then finally, the file is sent for review based on the pooling and service agreement. We're not going to go too much into that, but I just want to briefly tell you guys that the pooling and service agreement is a complicated process. It deals with bundling mortgages and selling them on a secondary market. Those mortgages are held into a trust, and then there's rules that the bank has to follow in order to, complete the short sales if that's the case, and that's just a document that's required.
And I just want to jump in here for 1 second, Brian. I promise I won't interrupt more than once. We did get two side comments to me that are we going to learn about forbearance and forgiveness? We absolutely are. We wanted to present these to you in the most severe, which is obviously we're all trying to prevent foreclosure, then the less severe, which is short sale, and then the obviously I want to keep my home, I don't want to sell, I don't want to move, which is forbearance and forgiveness. So we're getting these in order of severity. We didn't want to scare you off.
Exactly. And it's a good point. We're going to get there, and we're going to actually show you guys about the CARES Act, which is the new method for obtaining these forbearances with what's going on with COVID. But we're getting there, I promise. Okay, so our next slide here is a few tips if you're going to think about buying a short sale. All right, so being patient is key. Okay, so if you're a first-time home buyer, you should be wary. The process could take an extremely long time, and it's not always guaranteed that it could get approved. All right, if the first-time home buyer wants to purchase a short sale, it's recommended that it be approved before by the short sale lender. What that means is the short sale lender approved the purchase price, and they're kind of just coming in and signing a normal contract with that exact purchase price. It helps move the closing along, and then also just, it's a lot safer for a buyer entering into this. There's additional fees that you could have to pay, survey fees, special assessments, or other fees that aren't approved by the seller's lender. That's just something to look out for. There is a benefit to buy the property under market value. So they're often purchased by, investors, rehabbers, and builders. The benefit of under market value properties could yield good returns after you fix them up or you rent them out. If the investor doesn't mind waiting for a little bit longer than your normal purchase, this could be a good opportunity for them. So another pitfall and something that buyers should look out for is if they're going to obtain a loan and they want to purchase a short sale, it's a little bit more of a difficult process. The buyer's lender has to be succinct with the seller's lender, and the dates must all be, coordinated so that everything can get done in a timely manner. And then what everybody was waiting for, let's talk about forbearance versus forgiveness. Okay, so forbearance is a temporary postponement of mortgage payments. It's a form of repayment relief granted by the lender or creditor in lieu of forcing a property into foreclosure. Okay, so forbearance provides the borrower time to repay delinquent mortgage sums. This is advantageous to the struggling borrower, but offering forbearance also benefits the loan owner so that they don't lose money in a foreclosure. We'll get to the process of that and how it works with COVID, as I'm sure everybody's waiting to find out. But this is a very, very good thing to think about in today's world. Forbearances are happening and they're being granted. You just have to meet certain requirements, which we'll show you shortly. It's not to be, it's not to be considered forgiveness, which is something else. Okay, this is where the lender actually forgives some or all of the debt that you owe. The Mortgage Forgiveness Debt Relief Act was actually introduced in 2007. The act offers relief to homeowners who would have owed taxes on forgiven mortgages after facing a foreclosure, and kind of dictates that. We're not going to talk a lot about forgiveness because, to be honest, lenders aren't in the process. They're not in the business to be forgiving all the debt on their loans, right? So I think that it's more helpful for us to talk about how we get the forbearances and what we need to do in order to obtain those, especially with the new CARES Act. So just remember, guys, forbearance is not forgiveness. You'll still owe the money. It's just a temporary pause on making monthly payments. That gets us to the CARES Act, or the Coronavirus Aid, Relief, and Economic Securities Act. Okay, we're not going to talk about this entire act, but I do want to give you the main points that I'm sure everyone is looking for here. What's required to get the forbearance under this act? All right, so there's a $2.2 trillion stimulus package that comes with this act to provide forbearances, basically, as a temporary postponement of paying your mortgage for a federally backed mortgage. Okay, so this requires servicers to provide forbearances to any homeowner with a federally backed mortgage. If you're eligible, you can receive up to 180 days of forbearance. If you're still facing financial difficulty, you can request another 180 days. It's not always guaranteed, but it is something that you can request. Mortgage servicers can't really make negative reports about you if you are trying to obtain this forbearance, so they can't report it to credit bureaus or take a notch down your credit or anything like that. The CARES Act kind of protects you for that. Borrowers will also not owe any late fees or penalties if the forbearance is granted, which is also a nice benefit of getting a forbearance. Okay, so let's talk about how you can qualify for this. So first, the mortgage has to be backed by a federal agency. I listed the federal agencies on the sheet here. So as you can see, Fannie Mae, Freddie Mac, Federal Housing Administration, or FHA, the U.S. Department of Veterans Affairs, VA, and the U.S. Department of Agriculture, USDA. All right, so this is very important because if your loan is not federally backed, they don't have to necessarily do this. But you can call your lender and find out if this is something that they'll do, and maybe they'll have a little bit of different requirements, but fingers crossed that they can help you out with that. If you're not sure if you have one of these federally backed mortgages, you can actually check on the Fannie Mae or Freddie Mac websites. You can also check your original closing documents if you have those lying around somewhere, or your most recent mortgage statement. And if all else fails, you can give your lender a call. I know they've been pretty busy, so just be prepared to be on hold for a little while. Okay, so the next part of the process here in qualifying is that you may need to answer some questions to your loan servicer, okay? These questions were considered from the Consumer Financial Protection Bureau. So I kind of listed them down here, why you can't make your payments. Is there a problem you're facing, temporary or permanent? What is the current state of your income, expenses, or other assets, including money in the bank? Are you a service member, with permanent change of station orders, things like this? You should also try to indicate that you had some type of hardship due to the coronavirus, some similar to the hardships we mentioned above, okay? So you lost your job, unemployment, divorce, medical reasons, things like that. So that you can try and get this forbearance, okay? So let's talk about what happens now after you actually get this granted, right? You want to make sure while you're in this process that you discuss repayment options, because remember, forbearance is not forgiveness, and you will have to pay this back, all right? So a lot of the lenders now are suggesting these balloon repayment programs, right? So basically you defer the amount that's owed, and then you actually have to pay it all at once the forbearance period ends. I don't recommend that you set it up this way. I try to negotiate with the lender as much as you can so that you can get a different setup for you, something that actually works probably a little bit better. For an example, extension of the terms of the mortgage, So let's just say you get a forbearance for 4 months, or however long you need it, up to the 180 days, maybe just having them tack it on to your 30-year mortgage. So just adding that 4 months on the back end rather than having to pay it as a balloon payment, right when your forbearance ends. Another way is to maybe amortize the balance owed over the life of the loan. Okay, this is where you're going to repay a portion of the balance in addition to the usual monthly payments. So, those normal overages you'd want to go towards principal, you might be able to throw that down towards the forbearance amount. It's just another way of thinking of how to pay the bank back the money that's owed, right? And you want to definitely make sure here, guys, that you get all of this in writing. Okay, so everything you negotiate, if they agree to do it, make sure you get it in writing. I can't stress this enough, especially being an attorney. We want everything in writing. Just make sure you get it in writing from them, and you read the little fine print because it's still a bank, right? So make sure you read the fine print. You understand what they're doing. If you have questions or anything, obviously you guys are going to get my email. I could take a look at it. So things to remember when you do want to go the forbearance route, it doesn't reduce how much you owe on the total amount, and the total amount's actually deferred, okay? So, you want to be able to satisfy the terms of your forbearance as well. If you don't, that could lead to a foreclosure. Keeping in mind, this is a better option than that, but you still will have to pay, okay? So, and then entering into forbearance may disqualify you from obtaining any other new mortgages in the future. That's just one of the outcomes that could happen. Again, with all this COVID going on and everything, there's, it's a lot of uncertain times, but we're trying to get you as much information as we can. Okay. So that is forbearance. I put a little statistic on here just to kind of maybe, help ease people, but also know that there's other people in your situation, or if you need to help clients with this that are going through it. So forbearance requests grew to 1,896% actually between March 16th and March 30th. This is coming from a report from the Mortgage Bankers Association. Before that, the forbearance requests had increased to around 1,270%. Between March 2nd and March 16th. So, this is just a little food for thought. The statistics show that there's a growing rate for forbearance in the U.S. Due to the current economic situation and COVID. And, it is happening, and they are getting granted, and there is relief out there. And, Iversen Law and EXIT, we're here for you guys if you need it. Just feel free to email and reach out to us with anything you need, okay?
Nice. Brian, I really, really appreciate it. Are you going to have a slide with your information?
I have it coming right here.
Oh, right. Oh, well, let me be quiet.
There we go.
That owl fooled me.
Right. I know. So here's my information on here for everybody. Write it down, take it down. If you want that checklist I talked about earlier, shoot me an email. If you have questions that I missed or something, I heard beeping going on, but I have this one screen on. I can email you. And thanks for listening.
Guys, so I am going to go ahead and jump in here. You've got that slide up with Brian's information. Really a wonderful resource. I tremendously appreciate him putting this together, taking the time. Some of the calls that I've gotten, people are feeling like, the sky is falling. They're not going to have a job and their house is going to go into foreclosure. That is not the case. That's why we started with the most serious slide and said, hey, there's ways to avoid it. Some people are in a much more serious situation than others. They were already struggling for one reason or another, and this has really put them into even further of a tailspin. Maybe a short sale is looking likely for you. I will tell you that there are buyers buying right now, even in this crisis. So, we can help you there. We did in 2010, 2011, 2012, hundreds of short sales at our office. It was something we became known for. So, but there's a lot of you guys out there that your job loss situation is temporary. You're already out looking again, and you feel like that, there's a forbearance in your future. What I can tell you from my own past experience with debt, don't stick your head in the sand. Go out there and communicate with every lender you've got, not just these lenders, but every lender. But your primary lender is your roof over your head. This is the one that if you miss payments and don't communicate, this is the one that hurts your credit score the most, your mortgage payment. This is the one that hurts your future the most, because this not only affects your credit score, it could affect the roof over your head. Do not hide your head in the sand. I know a lot of chaos, and we're all depressed at sometimes right now, but do not avoid this. Pick up the phone and call them and start working with them. There are long wait times, long wait times. We all saw, some of you guys on this line are probably business owners like me. That PPP loan first round was an incredible disappointment to all of us. Where it went, how it was not administered, the lack of communication from banks like Chase. You are going to have to sit on the phone, do something else in the meantime. Put them on speakerphone. Some of them have callback features. Let them call you back. Have your phone on ringer. It is worth it to do that. Do not delay this if you are in crisis right now. We are here to help you at EXIT. Your EXIT agent that sent you this information or posted this information is your primary resource. They can help you with what's going on in the market. Anything out there, any opportunities in the market, any help you need, hand holding, just a shoulder to cry on right now. We are there for you. We appreciate you. Saturday evening, we have a magic show, so stay tuned to our social media feeds on how to get a hold of that amazing magic show. It's going to be really fun for kids, and then we will have some other activities, some health and wellness stuff next week, and then we'll be talking more on this stuff too. Appreciate you guys very much. Brian, anything else from you?
No, we're good. You hit it all on the point there. So thanks, Nick. I appreciate you letting us talk, and we're here for anybody who needs it. You got all our info, and shoot us an email.
Thank you guys again. Have a good day, everyone. Bye-bye.
Bye.